Friday, February 21, market analysis. Stan Ehrlich, good morning, and watch out. I've been talking about the markets topping out. And again, I'm not really very bearish. I am expecting a significant downside correction, uh, probably at least down to the lows that we have made in early December in general, depending upon the index. That's about right, time-wise. So for the E-mini, which is what I have on the screen right now, and it's a daily data chart, I'm looking for this yellow zone to be tested a little at and a little under 58.50. If that zone doesn't hold, then it will be broken, of course, and will probably move all the way down to 54.50. But I'm not saying that now because I don't know if this double top is going to kick in. And that's kind of what we have here. Yeah, some people would say a triple top, and I can't refute that. It's still either a double or a triple, but it's a top. And the measurements are the same for both formations, so what the heck? It doesn't matter what you call it. And the objectives are basically the same also. But look at what we're doing here. We are down 883, which is a pretty big down day. And I think it's going to drop off even more. We are now below the lows, a lot below the lows of the last 5 days, and almost below the low, maybe doing it right now, for another day. And if we can manage to get down far enough, which would be down to about 60.14, all of a sudden we'll be making new lows for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days, 2.5 weeks, not to be ignored. But we haven't done that yet. So this index, the E-mini, is holding up better than most. We'll look at the 1 minute. Nosedive. I call these kinds of breaks waterfalls. They're just my nickname for it because they start to go down, and they go down even faster and faster until finally, of course, you hit extreme oversold, which is what we just did. So at this last couple of minutes, sorry about that, last couple of minutes, I think we're probably at a minor low. But this is like catching a falling knife. I don't encourage you to try to do this. Yeah, the RSI got down to a super, super low of 3.5, and that does it for me. So what kind of a bounce we're going to have? Maybe all the way back up to 60.87, but probably that's the most, and then down again. Yeah, 3 points. We're still down 4 on the days approximately, and then turn around and hit the dust again. If you can get that high in the meantime. Next chart. SPY, essentially the same commentary, same information. And I am looking for a test of the approximate range of 580, give or take 2 or 3, 4, 5 points above and below. An old gap to close would be 585.15. That gap is going back to January 14th, 15th. All right, so I think we're on our way down. That's exactly what I put in text yesterday at the beginning of my YouTube, the one sentence I usually have, or 2 sentences. Next, obviously waterfall. Next, QQQ. Now, here is a situation that is a little different than the others. We're now testing right now the top of the previous pennant formation. Normally, you would think this is a place to buy it. It's a support line, an old resistance line, and up it goes. I don't buy that. I have a problem with the fact that it made new historic highs, not just new highs for a couple of months, but new historic highs, and couldn't hold it. And now we're really showing that it couldn't hold it. Last couple of days it slipped back down a little bit. That would be Wednesday, Thursday. And today, kaboom. And we are right now almost at the exact low of the day. I think we're going to go back into this pennant formation in a matter of minutes and stay in this pennant, and maybe, I don't know how much more lower we can go today, but I wouldn't be surprised to see a 10, 12, pretty big down day. Okay. And again, this is the start of a test of the 500 level and maybe lower. Next. Yep, we're down right there at the lows of the day on this 1 minute chart on the QQQ. Next. Very close to the low of the day on the NASDAQ, same line, same pennant formation. I don't have the bottom of it drawn in because the bottom didn't pan out all that well. But this is an old bear trend line. It's got, 1, 2, 3, 4, 3 or 4 points on it, broken classically, rallied up nicely, did not make a new historic high, but it came close. And that is a potential double top. Now, we did have a bearish engulfing at the top of the market, but because it wasn't quite overbought, I did not get a red signal, unfortunately. Now, that was a new high. That got overbought and did have a bearish engulfing, barely, but, it's black or white. There's no iffiness here. There's no maybe. There's no close. So, bearish engulfing, down a little, down a little, down a lot more, and down a huge. Actually looking very similar to the current, except we don't have red on top here, but a bearish engulfing, just not quite bullish enough to hit overbought. Well, we'll see. I don't think it's going to bounce off this line, and if it does, I don't think it's going to go back up very much. And I do think it's going to, if not today, maybe stay below what we have at the moment so far as the low of the day. Next chart. So we're getting a little bounce, and RSI 1 minute did get down to extreme lows, which I consider to be 5, around 654, right around there, and turn. Now, these very, very fine turns or bounces can last only a few minutes and not go very far, or they can sometimes be very significant turning points for the rest of the whole day. Hard to tell. But bounce, once you get to 5-ish, yes, usually. Now, we are oversold and just got there. On the daily data chart, so I'm using 25 on daily data just now. And it came extremely close to this support area. So I would not mind a modest new lows in the yellow support area and then bounce some. But remember, the first day you get oversold, not necessarily the day you're going to start to move in the opposite direction for overbought, oversold conditions. It may last several days, even weeks, which is fairly rare. Usually it's within 1, 2, or 3 days, maybe 4, after it starts to turn yellow on the daily charts. What we also have here is very important. Previous lows, that line right there, got broken. It didn't hold. We now have a new low for 1 full month. And big time. And you know darn well the volume ain't small. So I do think bounce, small bounce, very small bounce, or no bounce, we're going south. Next. Okay, had a little bounce, didn't get that oversold on the 1 minute, and coming down again at the moment. What about the Russell? Oversold again for the Russell. And in a major support area that I have been mentioning that we were probably going to come down into. Here we are. Also, the Russell is very close to for the lowest closing price since September. Yep. If the Russell goes down to, say, the low of today so far, plus a little bit more, it's got to get down to about, 22.00. And then that'll be a new low close for months and months. September, October, November, December, January, 5.5 months. 5 months approximately. Almost half a year. Very important. And the 1 minute chart just keeps coming down, waterfall. Now let's look at the interest rate futures. We're up fairly sharply, pretty good. New highs for a week and a half. And you know, if you've been listening to my YouTubes, that's what I've been looking for. This market did have a head and shoulder bottom. It did rally probably about 90%, 85, 90% of the upside objective on then all of a sudden on February 7th, provide a new short sale signal, came down, tested the neckline, and that was on February 12th. And now we have clearly a significant new high since the test of the neckline. This head and shoulder bottom is working 90+% classically. No major problems with it. We've had a couple of great trades, one from the very bottom day. And I got to remind you again, my ER signals system bought the low tick of the day on January 15th, which is 110.30. I remember. Yep, there it is. 110.30 is the low of the day on that day. And we got that green trade line starting. And the yellow line, I just put my little white circles, the handles are called handles, on the yellow line was a trailing stop. And we finally got out. Now we're higher than we had gotten out, but I would never have stuck with the trade with that much of my equity disappearing. Don't do that. Don't do that. Now, notes coming along just as well, doing great. Crude, almost a new low. I think I was probably making bullish commentary about this yesterday, and that has to go bye-bye, but I wasn't very sure. I remember waffling around, not being very sure one way or the other. So what we still have is a little sideways trading range, and the short-term trend for about a month is down, but the longer-term trend is what you usually want to rely on, and that is sideways to higher. And that started back in September. We could have another minor new low, and I'm still not very sure about this situation, so shut the heck up. Upside breakout on heating oil from the pennant formation yesterday is not working. We're right back inside the pennant formation, so you got a false breakout. You never got overbought, so that didn't help me much. And now I have to be very cautious about my comments in heating oil. Also, I just don't have a good, strong idea. Shut the heck up. Natural gas. I do have a strong idea, and it is the same as I've been saying for a couple of days. This market has a lot of trouble getting up to and staying above the top of the resistance area. On Wednesday, it touched it exactly. Pull back a little bit. It went through it on yesterday's rally, but closed well below and had a minor standard, not very reliable, higher high and lower close reversal. Today, you came up a little bit above resistance again, third day, and is now pulling back into the trading range or certain support and resistance zone again. So I think this is topping out. I have a fairly high degree of confidence, but I wished I would have had a higher high today by a few ticks, and then an outside down day would have given me a red bearish engulfing. That's not going to happen because we don't have the higher high. No engulfing with this current doji. It is up a little bit. Next chart. Although it did make a higher high yesterday in gold, it closed below the previous highs. I keep mentioning that again and again. This is not particularly a good sign. We're down just a little bit at the moment, not much. We made a low lower than yesterday and Wednesday's lows also, but it's hanging in there. It's lower by just hardly a bit. So I think it's trying to make a double top here with a bearish engulfing ER sell signal as part of the top formation, but I'm not very sure. Yeah, the trend is up. I see that. Trend lines are not broken. I see all that. Is it rolling over now or not? And I don't have a real good comment. Silver. Resistance area, stopping the rally every day out of the last 5 days except for one. Well, it actually did stop it, and the day before, but then it got into it and a little bit above it, but never closed with a breakout. So here we are challenging the bottom again. So I'm favoring the bear side of the move coming more than anything. But again, I don't have a real high degree of reliability on that, but I think it's going to come down some. And probably at least to 31.6, maybe even a little lower. Next. Same kind of thing. Platinum did make a new high above the top of the resistance area, and it got overbought on the same day, closed poorly, lower on the day. The next day, which was the 14th last Friday, it couldn't make a new high, stopped at resistance very accurately, and closed horrible, a lot lower. And then another down day, another down day, another down day. And yesterday was the only day we've had up. And now we're down again and almost another new low close, which is quite possible. And we also made a minor lower low for the move down. So my ER sell signal was premature, but again, part of the topping out process. I love the ones that are exactly on the high day and the ones that are on the high day. And you guys have seen many, many of those, probably hundreds. I've been doing this 2.5 years now, daily YouTube, 500 and some. And this is what I've been saying all the time, constantly. I don't change my strategy. I don't change stuff that I've learned over 53 years in the business. Being a technical analyst, by far and away, 40 plus years of it. In the first few years, you don't know what you want to do. There's no school for being a technical analyst. Well, then there wasn't. Now there's a Technicians Association of America, market, I should say, market, MTA, Market Technicians of America. But there wasn't back then, I'm pretty sure. Next, high grade copper. We got the top day. We got the top day. We got the high day, and we got the high day. A couple of them weren't that big, but that's not a small amount of money dropping off like that and dropping off like that. This could easily, it's done my first objective, got to the support, but that was back on Tuesday, no less. So here we are making another new low by a very small amount, probably a new low close again. I'm looking for at least a test of the bottom, 4.44, and maybe some of these other support areas being tested also in the next week or two. Bearish on high grade, obvious reasons. Now grain, beans, oil, meal, corn, wheat, and we have a minor new high in soybeans. Currently trading a little lower on the day. That doesn't bother me. I'm trying to justify a broad double bottom here from last August's first low, where we hit a buy signal just before it started to move up. Great. We did not quite have a buy signal, unfortunately, at the lowest low, which is the second low of a double bottom, and that date was December 19th. So we need an upside breakout. We need to close above, let's say, 11. And that should start to move up to a minimum of 1204 and maybe even a lot higher over a substantial amount of time than just 1200 plus. I wouldn't be surprised to see it a heck of a lot higher in several months. And I have to guess weather problems. That's my first guess as to, climate change as to what might cause it. Next chart, soybean oil. This week on Wednesday, we made a minor new high for the move up. Good. No new high for 6 months. Not yet. Close. Got a buy signal during, not the lowest low, the bottom. And this is a broad triple bottom. Or you could discount this low over here in August and say it doesn't mean much. And the two lows here and here generate a double bottom. One way or the other, you got three important lows. And I did draw a potential neckline across the tops because it looks plausible. The timing is not perfect. This low is probably a month or two later than I would have expected. But since then, with a buy signal involved, we have gone up. So I'm looking for up still. If we get up to approximately 51.5, we'll be at the breakout of a very bullish head and shoulder bottom that probably would have taken 10 months to develop. A pretty big one. Next. So I'm bullish. Soybean meal could also be bottoming out. Now you'll notice that there's a low back in June of 23. There's another low a little bit higher in February of 24. And there's a low in the support area of Christmas of 24, only a couple of months ago. This still stands as a low. So this looks very much like a very large triple bottom formation, but it hasn't gotten its rear end in gear. We're not far away from killing the whole thing, but only if we start to work our way higher, which it really hasn't done. Excuse me, the high of the last 4 days are all the same or lower. But the lows of the last 5 or 6 days are a little bit higher. That's the definition of a pennant, if you will. Okay, we need a breakout to the upside in order to make me smile about meal. Corn, I've been smiling for a long time. Head and shoulder bottom, breakout to the upside on December 26th. Minimum upside objective fulfilled, come and gone on January 23. Downside correction to support. New highs being made. Another little downside correction today. I don't think it's going to go very far. The trend is up. I'm not overbought. I think this correction might come down to about 494, maybe even a little lower, 485, but turn up soon. Real soon to a week, maybe a week and a half. Next. Wheat. Got overbought, and that's about all I got to go on. Didn't reach the resistance, just simply got overbought and rolled over. I think it might come down a little bit more. 585 looks interesting. Yeah, I'm going to stick with that. I can't come up with anything real good here. Just a very short-term, modest dip for a few days or a week, and then up to new high ground. Next. Oh, yeah, and wheat. The big long-term is a double bottom formation. Lows that were made basically in August, and the lower lows, not by too much, that we made back in December and January. Major upside breakout would be taking place if we start crossing over 647. I'll put a line there, and I'll put it right now, because that is a double bottom bullish breakout. Good enough. Okay. What about cattle? Almost a new low, almost a new low close, showing no real sign of bottoming out, maybe a little bit of loss of downside momentum. That does not mean a lot, but is one of the first signs that a market may be starting to roll over a loss of momentum. So I'm close to bottoming out. I'm close to oversold. I'm close to a support area, but I do look for a little bit lower, and then we'll see what happens. And that's going to be 192-ish, maybe down to 190. Next, hogs, new low for the move down. Resistance did stop the rally, didn't get overbought. No great signals lately. At least my opinion worked out okay. We're almost to my objective, which would be down into the support area at 86.9, 87, call it. And of course, a little lower in the support area down to 85.5. Now, I cannot rule out that being broken, 85.5, and it dropping on a chunk more. Next, we've got a big break on this stock. I did not expect. This is completely out of the blue. Bummer. But I do have some things to say about this. Firstly, huge gap. Gaps are almost always closed. The implication is we'll be coming back up sometime in the relatively near future. I don't think it's a day or two from now. I think it's going to be weeks because of the size of this break. This is a $15 break on what was an $80 stock. That's a huge percentage. So it blew away support completely, dropping off, showing no signs of bottoming out yet. And I suppose the next support area I'm going to have to come up with is around 61. I don't see anything much higher than that that's really good. Maybe 63. I got to be a little bit more bearish now that we've had this gigantic down gap. But watch out. We are now oversold. We are not just oversold, but we are down on a daily data chart to 9. That's extremely oversold. Usually, I would say something, and I think I have to. We are very close in time and price, both time and price, to a bottom on X, Y, Z for a good rally. I'm not saying it's a major bullish turnaround. I'm saying a very good rally. Maybe one will close the gap around 80 something. That's about the best I could say on the long side. Back to the E-mini. And we're looking at the 1 minute chart. It did make new lows while I was blabbering about 5 minutes ago. And now it's got another little bounce. So I'm looking for lower levels on the indexes. You guys have a great 2-day weekend and profitable trading to you.